Hello everyone and welcome back to the channel. So on this channel we just follow my investment accounts in my RRSP and my TFSA. Account value for both is $18,701.86, with the RRSP being up 36.58%, which only holds Starbucks. So I only have one stock in there, so I only plan to hold American stocks in here that pay dividends, just so I can keep 100% of my dividends. I don't have to pay a 15% withholding tax like in a TFSA. And then in the TFSA, it's a more mixed approach with Canadian stocks, American stocks, some ETFs, so a bit more experimenting in there, and a lot more positions. So if you want to follow along with the journey, please like the video, subscribe to the channel, and let's roll the intro. In the RRSP account, we only have Starbucks, so I just reinvested my dividend that I received from Starbucks at the end of November, and we reinvested it right back into the company. So about 2% of a share. So we went up to a little over 5 shares, and then 8% of another share. So we're trying to build this up. So I'm not buying more of this company right now at this price. My average is in the low to mid 80s. I don't like the price it's at right now, so I'm not adding to it. I'll reinvest my dividends into the company, but I'm not going to be buying more shares of Starbucks for now while it's trading at these prices. I think it's actually kind of fully valued, maybe slightly on the higher end of fair value, so I will not be buying more Starbucks, but I will be making another buy in this RRSP. So do watch my next update and you'll find out what else I'm buying in this account. In the TFSA, we are down $89.81 in the last day on Friday, so fairly flat, nothing too exciting there. And then all time, we're down just 2%, so we're down $460.04 in the TFSA with an account value of $18,046.33. So market not doing so great, so I think we're doing all right in this one, despite everything. So the buys since last week, I received a dividend from Apple, so I just reinvested it back into the company. So we got about 3% of a share, going up to 7.38 shares. This one's in the green. It's been pretty solid since I've owned it, so really no complaints. It hasn't moved much, but neither is the rest of the market or big tech. With Algonquin Power, I purchased 2 more shares of it. So one share I bought from a deposit, and then the second share I received, a little over $12 dividend from Intel. So I decided to put that towards another share of Algonquin Power. So we're up to 53 shares of this. And in my previous video, I actually went over the massive decline of the stock. So it's a pretty long video.
That's what she said.
And I really go over, the financials and all that, and just my thoughts on the company and analyze a little bit deeper. Another thing I want to note is that there is a lot of insider buying with Algonquin Power and utilities. So the people high up in the company are buying the stock, and they would have a better idea and a better sense of how the company is going to head than, any investor outside the company like you or me. So whenever insiders, especially like higher ups in the company, are buying their own stock, that's something to note. It doesn't mean that it's going to turn out well, but it at least means they have faith and belief in their own company. So if they believe in the company, then I don't see why I should lose mine. And for ATD, so Alimentation Couche-Tard, they had pretty good earnings report, and most importantly, they had a 27% dividend raise. So it's now up to 56 cents. 2 years ago, this was giving about, like a 35-cent dividend. And it's just been increasing every single year. Like, this dividend is just growing so fast. And just from this dividend raise, I only have the 10 shares here, but I'm going to get an additional 10 cents a month from this raise. I don't have that many shares, but 27% raise, it goes a long way. So 10 cents a month to my passive income which is kind of the whole point of this portfolio. I just want to build a stream of passive income to give me financial independence in the future. So ATD doing great. Aritzia still hanging in there, up about 35%. We're really just waiting for another earnings report from Aritzia before the stock moves in either direction. For Brookfield Asset Management, this one is kind of recovered. It was kind of in the low 50s. We did buy it a lot while it was in the low 50s, so I'm really glad I did. I even wouldn't mind buying more at the current price. So, and the update with this one is it will be spinning off the asset management business before the end of the year, and so you will receive 1 share of the new spinoff for every 4 shares you own before the end of 2022. So sometime in December, you will receive it. And another thing is that Monish Pabrai, a famous value investor from India, is buying Brookfield. And the big deal about that is he only has 2 stocks. Like, he's very concentrated. So it's not something I preach on the channel. Like, I don't think you should be fully concentrated and all in on a stock, just because if you get it wrong, you can lose all your money or lose a significant portion of your money and, jeopardize your future. I kind of would prefer a strategy where you hold more holdings. Of course, he does more research than the typical investor, and that's why he's going for, I'm going to invest my money in the best possible opportunity, whether it works out or not. But not everybody's in that position to take on that level of risk and concentration. So I don't recommend it for basically anyone. You're probably better off holding more positions. Even though in my portfolios, it seems like picking like just one company in my RRSP is really working out. Although do keep in mind, it's not a very large portion of my portfolio. It's only about 3% of my money. So just weigh that. And then Scotiabank, I had okay earnings. We just bought a fractional Scotiabank, just a little bit more into this position. Costco fell a little bit, so I'll be keeping an eye on this. If it drops like way into the low mid 400s, I'll definitely be picking up some more of this company. For ETHY, I bought 2 more shares, so 2 more shares of this Ethereum ETF. And really all I do with this one is I use Shakepay. So that's just an app you can use, and I shake it every day for free Bitcoin. And then once I hit $5 in that app, I just sell it. And then I purchase this Ethereum ETF because this gives me a monthly dividend income for holding crypto. And I prefer Ethereum to Bitcoin just for its utility. But of course, it's very risky. It could go to 0. So I don't recommend anyone buys this if they want like a consistent stream of income, because as the value of crypto goes down in general, the dividend yield goes down as well, because they don't sell as many call options and you don't make as much income for this fund. So for this fund specifically, if you're looking for consistent steady income, avoid it. If you want something a little bit more risky with a lot of upside but extremely high risk, then maybe this is something you want to look into. I also bought another share of Granite Real Estate Investment Trust, so we went up to 2 shares here. So this is a position I had before, but we're trying to build it back up. I sold it earlier in the year to focus on Scotiabank and TD, but it's a solid real estate company, and I really like it. And I also purchased another share of TELUS, so we went up to 34 shares. This is just a solid company. It's going to be increasing its dividend by 7 to 10% until 2025. Every earnings report I see, like, they make progress. They have many different businesses. Love this company, and I really want to continue to build this position with each and every deposit that I make. And TD Bank also had a pretty strong earnings, but it's also another stock that raised their dividend. So I had 2 dividend raises since my last update. TD raised their dividend by about 8%. So this one is going to be paying 96 cents a quarter from now on. So from this dividend raise, because I have 18.7 shares, I'm now going to be receiving an extra 44 cents a month in passive income, basically forever, from this raise. So the more shares you have, the more impactful a dividend raise will be, because your monthly payments or quarterly payments are going to be larger and larger, and going to be buying more and more of the company. And if you want to start investing and creating a passive stream of income for yourself, or doing growth investing, however you want to go about it, feel free to use my link for WealthSimple in the description below, and then you can get the value of up to $3,000 when you make a deposit. All right, and for the dividends earned since the last update, we're up to $952.03 of earned dividends. So we have the one dividend of $12.27 from Intel so far to start December. So nice little start to the month, just to kick us off with some income right away. Annually, we're earning $922.57 every single year from dividends. In the previous update, we were earning $908. So pretty good increase over there. And then for the monthly average, we went from $75.72 to $76.88. So a little over $1 in terms of monthly income. Just keep in mind that 54 cents of this is just from ATD and TD Bank raising their dividends. So this is without me reinvesting a dividend I received. This is without me making a deposit. This is just extra income that's coming in because I picked two companies with growing revenues and cash flows, and as a result, I'm going to be rewarded with more and more shares of the profits as time goes on. So fantastic seeing that. Love a dividend raise. There's really nothing like it, receiving a raise, all for just being a shareholder. And then weekly, we went from 1747 to 1774. And on the daily, we went from 249 to 253. So 4 cents a day extra in passive income. We're itching closer and closer to my goal of hitting $3 a day in dividends. And then months to earn $100 has decreased again from 1.32 months to 1.3 months. So we're trying to get this up to 1. You know, it'd be a nice goal to hit $100 a month in dividends on average, and just get that every month on average. So we're getting closer to my $3 a day in dividends goal. We're getting closer to 100 a month. And then for the annual, we're trying to hit 1,000. We're at 922.57. So we're making good progress over there. So that's pretty much it for this update. In the comments section below, just let me know what stock do you think I should buy in my RRSP. Just keep in mind it should be a dividend payer. It should grow the dividend at a good rate. So because that's the strategy I want for my RRSP. I only want dividend paying stocks, and American stocks specifically, to take advantage of that lack of withholding tax. So I get to keep 100% of my dividend income. All right, have a great day, everybody.